What's going on, everybody? I'm Susu. Welcome to the show. Got to do it at the house today. Little by Lemshi. Lift your face up, son. There we go. Little blonde hair, blue-eyed boy. Yeah, that's right. Arabic all up and through him. That's Isaiah over there. Little rascals go play Fortnite. My God, you guys have no idea the disaster that I just had trying to get this started. There's a reason why I have this screen going here. You might hear food sizzling in the background. It's my beautiful wife cooking tacos for Taco Tuesday. So what happened was, some of you guys are like, yo, where the hell did that video go that you promised everybody? Guys, I swear to God, I did it. I did it. But this is what happened. Let's see if we can get into the quick finder right here. This is it. That is the video. Like I said, I actually already did this video 3 times. Did the video 3 times. Every time I try to show you guys this, when I'd go back to my stocks in TD Ameritrade, the landing page was the dashboard, so you'd see my account number. And I'm like, what the f am I supposed to do? So I finally changed it so the landing page is now my watch list. But as you can see right there, 7:27, it was done at 11:56 p.m. But in the video, the whole entire video was actually about playing Facebook puts on Monday morning. So this was shot last Friday. And it was about playing Facebook puts. The whole deal was when it opens up on Monday and breaks the Bollinger Bands at the top, you bet against Facebook and buy the 195 puts. Problem is, no audio. There's only music in the background because that's already in the OBS system. I put the music, although I know some of you guys don't like it, but I love music. That's what I do. But the point is, there's no audio on my end. I am not being recorded. Big problem. So basically, there it is, me showing you the 195 puts. Look, I draw the chart. Go look at Facebook. This is from Friday. This is Friday's chart. Go look at Facebook now. And you're going to be like, what a fantastic call that was. It literally dropped all the way to 193.50 today. It was a 240% play that I totally blew. In fact, when this happened and I realized I had no audio, it was so distasteful and made me so miserable. I actually no longer took the play serious. And I know that sounds dumb to some people, but I didn't because I was so angry that I put this time and effort into making this fantastic video. I mean, let's just do a quick run through of the video, right? Just do a quick run through. Look at it. I mean, I took you through the whole entire thing, how to pull up options in TD Ameritrade, how to compare them, how to go from chart to chart like Tim Apple asked. I mean, you know, from all that, look at the just everything. That's me where I'm explaining when it breaks out up there, you bet against it. You know, I've drew in fake Bollinger Bands. Like when it breaks out of the top, you bet against it. Go through the whole entire process. Then I took you through Robinhood and showed you, like, you can see me circling stuff the whole time, circling this, circling that. I mean, what an absolute disaster to have spent so much time and did such a fantastic job and to have a call that actually was a 240% call had you held till this morning. And if you sold yesterday, still 140%. Point is, totally blown. I didn't even get the call. None of you guys got the call. It was a wasted, disgusting effort. And it just makes me sick. All right, so let's go into the important. See, now it's pulling up to the watch list. Before, when it did that, every time I try to go back, it was on my actual dashboard, so you'd see my account number. I was furious. That food smells great, babe. All right, so let's go to Apple. So Apple reported today. We're doing the same thing as what happened with Facebook. Remember, let's real quick take you guys through the gist of what I was saying about Facebook. So Facebook reported last Thursday. When it reported last Thursday, look what it did. On the 1 month, snap a shot of this and work on it for just a moment because I'm going to show you about Apple. So right here, boom. On the 1 month, breaks through the Bollinger Bands right there. And then once it broke on the 1 month, the same day, if you were looking on the 1 day chart, you'd actually have to go to the 5 day, like I had said this before in a video. But right there, if you went there, boom, and bet against that, you get down. This is the same thing we're going to try to do with Apple. We're going to get a break on the Bollinger on the 1 month and get a break on the daily tomorrow. If it opens up and breaks right out of the top, we're going to bet against it. Is it guaranteed it's going to do it? No, but that's why you're not going to put $1,000. I lost like $325 today because of Cron. Because I didn't realize that it actually breaks 2 times through the Bollinger Band on the bottom end. Every time, like 100% of the time, it's 2 breaks and then you get a bounce if you even get one. I didn't realize that till today when I was looking at why my trade went wrong. And I was like, dude, you missed the most important clue of all. But let's look at this now. So this is what I end up telling you. I basically say, and this is with the settings. At the time, I had settings of, what is it? What's the settings? Now I have 3 and 9. I think at the time I was using 2 and 20. And I said, if it breaks through, so on and so forth, then you go through it. Well, right there, that was Monday. Right here was Monday. This second one, this big red one right here, was Monday. It broke through the top of the Bollinger Band on the 1 day. You can actually see it on the 5-day chart. If you pull it up, here's Monday right there. Monday. Went right, tapped through the Bollinger Bands. Once it tapped through the Bollinger Bands, which right now, for some reason, showing it. But yeah, surely did. Tapped right through it. My settings are okay. I want to change that indicator. Let's see what my indicators be. One might have signaled it to me. Try a 2 and 13. And I've been using everything from a 2 and 13 to the 2 and 5. There it was. And that's what it was. It was just a tap to it. It was the 2 and 13, which I've been actually using on Cron. See how it just tapped it right there? It's so small. So small. But that tap right there on that candle, that's all I was looking for. Once it went boop, bet against it. Tomorrow, with Apple, you're going to do the same exact thing. So Apple's going to be waking up way out of the Bollinger Bands. For Apple, we're going to use, let's real quick, let's try to contain Apple with the most conservative thresholds that we can. And what we mean by that is let's push the Bollinger Bands out enough to find a spot where Apple rarely ever breaks the top of the Bollinger Band. But when it does, it goes down from that point 100% of the time. So basically, that's what the different levels I found out the Bollinger Bands are for. 2 deviation, 3 deviation. I found out the settings naturally in all systems are 2 and 20, right? But then I found out things like, for instance, look at, we're just going to real quick show you guys LPTX, which is Leap Therapeutics. Look what we found out for this. Look at how it's just sitting out of the Bollinger Bands the whole entire time. It's just always out. And then look at this drop right here. It's like to nothing and bounces. Watch this. If you then take the indicators and you change the Bollinger Band settings to 3 and 20, look how ridiculously accurate it is. Boom. Look at that. Look at how perfect. And this is what really sets it apart. When you go to the long distance, go for, like, for instance, 6-month chart, look at how reactive it is on this one. It goes up right there, touches it. I mean, let's just look real quick. If you actually take a look right here, look, right there, right there. When it touches it, it drops, right? And it rarely ever is just staying there. Now, this is one of my favorite things about it when you actually look at this. Look at the 3-month and look at this beautiful transition when it's actually down here. You know, it does break right there, but it does correct back up at some point in a little bit. But the point is look at how it stays in the bottom band. And once it becomes bullish and people become bullish on it, look at how it transitions to the top band. So here's the middle band of the Bollinger Bands right here. And look at how it stays down below and then it goes up. Once it goes up above it, it stays in the top range, exactly as should be the case with your Bollinger Bands. Nothing should just be sitting there crazily jumping around in every direction and you can't see any support. What's up, Dudo? Hold on, I'll be with you guys in just a second. Take a look at this, the very recent time periods. Look at how it's been using that mid-range as a bounce, right? So it goes up, bounces there. Right here, it comes down, touches it, bounces right back up from it. Also, in addition to that, look at how it's actually not oversold until today. So someone else was looking like it's been out of Bollinger Bands the whole time if you have another setting. Well, yeah, but it's not today. It went there yesterday, came back down. Today, it went above it, came back down. It's actually within the range. It's using the Bollinger Bands as a threshold, making 250 possible. So all I'm saying is that when you actually look at it that way, you go, oh man, there are different settings for different stocks, and it's very important to know which ones. All right, so let's look at the Apple play. Apple is sitting here. We're going to change the settings to something that only, matter of fact, look at this 3 and 20 setting. Look at how much open space there is where Apple actually never goes out of the Bollinger Bands ever. Look, it just never goes out ever. There's only a couple occasions where it goes out and doesn't get rejected. Like right here, it goes out. Up there, it doesn't go out. It's not until right there where it really comes out of it. And look at the drop that came after. And then right here, it did actually pop out decently right there on the red one right here. See where the box is right there. And then it goes back up a little bit from like 184. Actually, it's like 182.85 according to the low there, back up to 192, which is a pretty massive rise. I mean, it's almost a $10 rise. And from that point to 1, 2, 3 on the third day after it's up there, that'd be a massive move in options. So if we use this 320 setting and tomorrow, look at where the Bollinger Bands are. They're right here at 213. That's given a lot of room. That's a 3 deviation. It's now trading at 217.71. So we could use that one, or we could tighten it up a little bit and try to catch it a little bit better, be more sure. Now this would be like super conservative, and if it breaks out of the top Bollinger Band on the 1 month, which I believe it would according to what I'm seeing from the chart right here, then you would just need it to break out of the 1 day, and that might not happen with such a wide range of settings with the 3 and 20. So one of the other things that's been reacting fairly well to has been like the 2 and 20. You could even go the 2 and 9. Let's see what the 2 and 9 is. That's the 9 day, by the way. For you guys that don't know what 2 and 9 mean, 2 is just 2 deviations away, the standard deviation. And what 9 is, it's actually your EMA line. So let me show you what I mean. Let me get rid of the EMA. Actually, for instance, right here, what did I just change it to? I changed the settings to 2 and a period of 9. Do you see how there's no green line? See right there? If you actually look, there's no green line on my chart for the most part. Look, the EMA, the 9-day EMA is green. That's why it's 5, 9, so it's maroon, green, and blue, right? But if you look at my chart, it's hard to see the green line because look where it's at. It's almost buried under the middle band of the Bollinger Bands because it's the 9 period for the Bollinger, and that's the 9 EMA, which shows you how they nearly almost perfectly align. So for you to determine what something's using, all you truly have to do is get rid of your Bollinger Bands, pull up your 5, 9, 13. Once you've done that, you could even pull up a 9. You forget your 5-day. Let's say you don't want to use that, but you want to use instead, you want to use the 9, 13, and 20. So you can go 9, 13, and then a 20. Pull those up, and then you could at least see what Apple's using. And it looks, from what I can see here, the 13-day has been a bounce point sometimes. The 9-day has been a carrier many times. Up here where you see those two floating, that's the 5-day. That's when it was used in the 5-day. So if you look here, the one that gets touched the most is the 9-day. In fact, right there on today when it came down to the 9-day. Right there. See that? 9-day. All of these are using the 9-day. This one back here is using the 9-day. These two, for the most part, are using the 9-day. When you consider that, that means the majority of all the candles are using the 9-day. That being said, when you set up your Bollinger Bands, then set it up to a 2 and a 9 or a 3 and a 9. However you want to do it, try a 2 and a 9, try a 3 and a 9. I found out that 3 and 9 does work very well on a lot of things. So here's your new Bollinger Band with a setting of 3 and 9. Let's see how reactive it is to this one. Okay. Let's go to the 6 month and find out how reactive it is. So we're going to have to take a snapshot and then zoom in. Okay. It does touch there and doesn't drop. Actually, right here it comes. Let's go back down. Right here it does and it drops. Right here it doesn't touch, but it comes very close, drops. But look at the bottom side. It did touch here and then rose up. So it touched and went out. So it's reactive there and there. Okay, let's keep going. Comes very close there and has a drop, but it didn't touch, so it doesn't really count. Right there, it almost touched. Didn't quite. Right here, it broke through and then a big drop. Right there, so very reactive. Right here, it seems to hug it. There's a reason why we're doing this, trust me. Right here, it starts to hug it, and it does bounce off that. Comes all the way down, nearly touches it right there, but it does not touch, and that ends up being a big reversal point. So we can't really count it. Here it does touch it, and there is some rejection afterwards. It's almost like the touch, and then it gets rejected, right? And then all the way up to here, and now it's up here. Now this is why 3 and 9, maybe that will be the one. I don't know. I'm going to have to really double check, but I think I'm going to use 3 and 9. Because right here's look at the 3. You got 3 deviations up, and it's at 214. I'm thinking it's going to open tomorrow around 217.80, 217, somewhere around there. In the morning, as it begins to, settle down up here, it's going to be sitting out. The Bollinger Bands are going to come out and start to build around it. So what happens is if it wakes up in the morning, it's already probably going to be out of the Bollinger Band on the 1 month. If it wakes up in the morning and on the 1 day chart tomorrow morning, you should be looking at the 1 day chart, looking at the 1 month. You should be bouncing back and forth like this. This is what you should be doing. 1 day, 1 month. 1 day, 1 month. There should be verification that the 1 month is broken. And then you'll want to watch the 1 day to verify that that gets broken. And it'll be something like this. See how the Bollinger Bands are like that? So they'll be encapsulating the stock. And what you're going to look for is you're going to look for Apple to just pop out. And once it pops out of there, that at that point, whatever it is, it could be 220, it could be 219, it could be 227. Like, we just don't know where it's going to pop out in the morning. But if and when it pops out in the morning, right at market open, if it breaks the top of the Bollinger Bands, let's say they're like this, and it just pops out right there, that is when you want to start considering playing the puts. Now, I know you're like, dude, this is Apple. They had a good earnings report, but there's not that much good news around the horizon. They've admitted that they're losing money. I mean, guys, it's not even about that truly. It's just about playing the technical signal because, look, Facebook had no bad news truly, but look what happened to it. You know, a lot of the companies that you see showing invalid signals for Google. That's weird. But yeah, so look at all these invalid signals. I have no idea what the symbols. I have no idea what that means. But yeah, so you're in a position where if you really look at this from the perspective I'm trying to tell you, don't think about it as Apple. Just think about that there was a huge buildup to their release. Their earnings release came out. They were losing. They're making less money than they were last year. The earnings last year was $2.34 per share. Now it's like $2.18. So they are losing in terms of not losing actual money, but they're losing in terms of, you know, their earnings per share. So things aren't totally bright. You have Trump over here saying that he's pretty much going to screw China out of any deal if they don't get their shit together immediately. That's not good. In addition to that, you have the Fed meeting tomorrow. If they agree it's just a quarter of a percentage point, everyone wanted a half. They don't like this whole quarter of a percentage point. In fact, that's why it started to get punished a little bit ago when it was up in that 27,390 range. That's why I got pushed back down, is because they came out and said it's going to be a quarter of a percentage point instead of a half. So when you consider all of that, I'm going to play, and this is the way you do the puts. When you pull into your options, right now it's showing that the 215 I'm going to be playing the puts. So it's showing that the 210s are $5.19. Remember, the implied volatility was 95.75. Right there, you can see it. That makes these things ultra expensive compared to what they normally would be. See how they are, the 95.75. That makes them double the price they would normally be, right? I mean, that's the way options work. They're like double the price. That being said, if you look at it from this perspective right here, tomorrow when it opens, because not only will the implied volatility go away because the earnings are already done, in addition to that, it's going to be up to 217, 218 range, might be 215. Who knows where it settles out to? Meaning these things right here are going to be cut in half immediately because implied volatility will be gone, making them $2.50. And then they're going to be cut in half or more again because, of course, the stock is going to be up a couple dollars. You're looking at these potentially being $1 or less. I mean, the 210s, if it's anywhere near 217, these things might be in the range of like 50 cents or 60 cents. If that happens, that's exactly what I'm going to take. I'm going to take the 210 puts. Who knows? If I look and see because if it goes like 219, then I'll change that to like the 215 or the 212 puts. But if it's like 215 to 214, I believe I'm going to go for the 210 puts. And that's something you have to go for on your own as well. You have to decide that. Some people ask, how do you do it? But this is how you do it. You basically go in, you look at what the situation is right now. And if you look at the option chain, there you go. You have it. It's telling you all the prices. The prices are super inflated right now because earnings was today. And so their implied volatility was high. The implied volatility, what they call the IV, is basically saying they are implying in the price, setting the price of the options, that the price will be volatile, more volatile than usual by far. Therefore, you will have to pay a premium to play because there's a chance it could go up 7%, 6%, and it's up 3.9. It could be up 4% tomorrow. That's going to make some people a decent return. For instance, anyone who played the 296, the 212 calls for $2.96. Well, if it wakes up at $217.85, that's already $5 above. So they're going to be trading for $500 a contract instead of $296. In addition, because it's not even the end of the week, there's still all of tomorrow, all of Thursday, and then Friday. There's also, because of the time value, so look at this right here. You have this thing called time value. See the time value right there? 293 right there. the time value also adds a lot of value to it. The more time value there is, then the more you pay, because there's a chance it could keep going in the direction you want it to go in. And because of that, you still have 3 full days, including tomorrow, of trading. You have implied volatility high because earnings just came out. These things are going to get destroyed, meaning the puts are going to get destroyed first thing in the morning. They're going to be very cheap. And so that is why I'm going to play the puts. I'm going to go for the 210 puts or the 212.50 puts, depending if it's at 215 or 217 or 219, depending on where it's at. I might even, if it goes all the way up to like 220, then I'll be looking for the 215 puts. But basically, I'm trying to go $5 away. Okay, $5 away. And so that's what I'll be doing. Now, if I was you guys, if you don't know how to buy options in Robinhood, it's fairly simple. You literally just, if I was to go in right now, I believe you'd see the way I get my password in there, which is sucks. I wish I would have, I can't leave it open. I have to cancel the fact that I need a password to get in. But basically, you just do like anything else. You hit the trade button. And when you hit trade, again, with TD Ameritrade options, if I was to hit that trade button right now, the next page, you would see my account number directly at the top of the page. So there's a problem, which anyone who with TD Ameritrade could tell you they could do that right now, and your account number is directly at the top of the page. And I can't, risk putting that out there. But the point is that you should learn how to actually click the buttons and do that part on your own. I mean, I could show you here. Matter of fact, hold on. Let's see. I can actually see in here. Let's take a look real quick and see if I can just get into Robinhood without you guys seeing. I'm going to watch my screen here and see if you can actually see the numbers. Okay. So yes, you could actually see the numbers coming in. And to me, that's problematic. Those weren't my numbers. I just wanted to see if any numbers came up. So sure as shit, you could actually see my passcodes and stuff like that. So, and with this connected, I cannot. Hold on. This is what I'll do. Let's see if we can get the feed going. Let's see if we can pull it up. I'll pull it here. Okay, here we go. Let's see if we can plug it back in and you guys can see what's up. Let's see what will happen. Okay, I don't see anything just yet. Let's see if it comes up. See if it goes live. Okay, so here's one of my option tradings accounts. I have 2 of them. As you saw, small balance, nothing crazy. Obviously, that's because I'm not like a lot of people where my thing is constantly cycling to continue to grow money. It's literally, if I need money out of it, I'll spend it. I just asked my wife, do you need any other things this week? Do you need anything coming up? I'll literally pull $500 out and give it to you right now. So what you would do in here is you go to Apple right here, and it's up $9 in after hours. As you can see, man, that food smells great. And then what you'll do is you'll hit trade options. And then what happens is you have on the top, right there at the top, you see where I'm clicking at the top. See how it's going from left to right? See how it's going left to right? Right there, you'll click the August 2nd. And then you'll click the put. See how there's put and call, put and call? Right there, right, left, left. I'm trying to play the puts tomorrow because I want it to go up, break the Bollinger Band, like I said. At the same time it breaks the Bollinger Band in the 1 month, I want it to break it on the 1 day. Then I'm going to bet against it. So I'll be watching it back and forth. I'll be going back and forth like how I was showing you before. Let's see. I'll be literally going back and forth like this. I'll be bouncing back and forth, back and forth. Oh, I forgot. So I got to do this again. Jesus. There, we're right in. Okay. So yeah, I'll be going back and forth like that, and I'll be watching the chart in TD Ameritrade and then doing the trading actually in here. And the reason for that is because this is free. So if I want to take $50 or $100, it's totally free. TD Ameritrade, I think it's like $7.95 a trade, maybe more for options, like $9. I'm not exactly sure because I do all of my options trading in Robinhood, never in TD Ameritrade. I would never let somebody spoil a $40 return because that may be laughable to some people, but I mean, look at Ron. I could have had a $40 return yesterday, and we're talking about on a $240 investment. I had a $40 return. I didn't take it and took nearly the entire loss and then backed it up with more losses today because I bought into it, hoping that tomorrow will bounce. But the point is that you want to be able to take the $40 if you made it. So let's look at how we do this. We're going to go into Apple. Remember, you'll be bouncing back and forth, waiting for the Bollinger Band to break. And then pretty much what you do is you hit trade options. You see how I did that? You hit the trade button. See how it opens up? Trade right there. You hit trade. And then the top one right there, trade options. I got to make this white so you can see it right there. Trade options. So you'll go in there, trade options. Once you get into trading options, you have the option to do August 2nd, 9th, 16th, 23rd. I'm going to play the short term. I want it to basically break out of the Bollinger Band and reverse back down. Now, most importantly, I want to tell you the price I'm going to go for. So I want the puts. Right now, the 215 puts. Let's see here. The 215 puts are 803 for August 2nd. Look at that. 212 puts, 650. The 210, 518. These 210 are going to be like $1 in the morning. They're going to be like 80% gone, maybe 90% depending on how high Apple goes. So they're going to be $1 or less tomorrow. That is why I'm thinking to go for those. Now, if it goes up higher, then I'll be looking at these. But that's what I'm trying to say. They're not $6.50. They won't be that tomorrow. They're going to be in the $1 range, maybe $1.25 range, maybe cheaper depending on how high it goes. Basically, I'll go in there, go like that. I'll hit 10. Let's say I want to do 10 of them because I might do 10 of them, especially if it's only $1 for $1,000. Let's say it's $1. I'll do 10 of them for $1,000. Hit review and then swipe up. Once you swipe up like I just did there, your order is received and you're ready to go. I could actually leave that right there tomorrow. So let's say it just happened to drop to $1. I could snag them. But I don't like to do that because what if it actually opens up much higher and I have an opportunity to get them for 60 cents or 75 cents or something. So see how it says queued right there? That's because they're already ready to go for tomorrow. I'm, of course, going to cancel that right now so that I can be prepared in the morning. That's why you guys aren't going to hear from me on StockTwits. Don't ask me anything because I'll be too busy doing this. Dismiss, cancel that order. The order has been canceled. Okay, see how it says right there, canceled now. So in the morning is when I'll go in there, I'll be reactive to whatever the market's doing, and I'll make my purchase that way. That's the play I'm going for. I'm going for Apple puts 210 to 212, depending on if the Bollinger Band breaks on the 1 month and the 1 day. It has to break on the top. The Bollinger Band settings I'll be using will be the 3 and 9. So I'll be using the 3 and 9 setting right here. In the Bollinger Band, let's just go there real quick. The chart here, that little gearbox on the right side, that little gearbox, you can see it blinking on the right side. I go that, see the indicators button right there in the center, indicators button, click on that, upper chart, the lower chart, the upper chart, then click the little I, the right of the word Bollinger Bands, that little I for input, then 3 and 9, and that's what I'll be using. See if tomorrow opens up on the 1 month, breaks through this one up here, like pretty much you'll see a break like this up through it. This would be like the 219, 218, 219 range, 20 range. I want to see a break up through it. That would be on the 1 month, as you can see right there. That's the 1 month chart. At the same time, I'll be going back and forth to the 1 day chart, and I'll be waiting for a break through this thing. Let's say this is where it opens up tomorrow, and that's 217 right there. Let's say it's 218, 217 right there. And up here's 219. I'll be looking for the Bollinger Band to go like this. Come up right through it like this. Just bloop, break through it. Once it breaks through it, I'll bet against it right there. I'll buy the 212.50s, 210s, maybe even the 215 if it's up in the $220 range. So that's all I'm saying, guys. That's the one I'm going to go for. Who knows if I'll get it. I'm sure as the hell going to try. I wanted to show you guys what the play was going to be because look what happened with Facebook. Had a beautiful plan laid out. Didn't get to post it because there was no audio. Had the whole thing laid out, and look what happened. Totally blew it. So, I mean, it was such a perfect play. And so if this works out, great. Maybe you shouldn't play this one if you don't play options very often. Maybe you should just watch this video and then track it and just kind of see what happens. Is he right? You know, stuff like that. Because again, I won't be able to get with you right in the morning because I'm going to be totally focused on this. Okay? That's how I'm going to be totally focused on trying to get this win tomorrow to make up for this Cron loss. Well, I hope Cron just pops tomorrow for no reason. I think it's down again in after hours. 1381. And that's 2 days though whacked on the there you go. Your Bollinger Band broke 2 days in a row. 1, 2. 2 days in a row. So hopefully tomorrow we just get a bounce. It doesn't need to be to 15. I'm just looking for a bounce up here. Anywhere near there. Even if it just gets to right here, like 1430, I'll get out of mine and be profitable. All I need to be profitable is 9 cents. Because the ones I bought this morning, 9 cents. I'll be profitable. I get to 11, and I'm very profitable. Not very. Probably get to 13 to be very. That'd be like almost a doubling. Yeah, because the average of 7. So yeah, I would need it to go to 13 to double. 14 really. All right, let's see what happens. I'll let you guys know how that play goes. Make sure you watch the video. Make sure you stop, pause the video, compare it to your chart. Make sure you're getting the same settings. Make sure you pause the video and look at Robinhood if you have an account and say, okay, this is what I do. This is how I input it. Make sure you look at the video and remember when it says $5 now, it will not be that in the morning. The puts will be way, way down, like 80% down. That's why my brain is already planning for them. I'm trying to adjust my brain to think, yes, it looks expensive now. It'll be destroyed in the morning. And so I'm going to try to swoop in and get them cheap. I'm going to try to play it at a perfect time so that the drop is $1 or $2 very fast. Hoping for, like, if it's a 217, 218, I'm hoping to go down to 214 fairly quickly. And then I will be happy to get out there. Because if I can get from there to there, that will most likely $3 that fast, probably be 100% return. And then from there, I'm very profitable on that trade and I'll be out. Okay? I love you guys. Peace.